NIO in pre-trade touching $5.90 means that the $1,000 challenge is up at $4,153.94. Yes, you heard correct. It means that $1,000 now are $4,153.94. And you're listening to the StockInvest.us podcast, Trading Tips with Jim, the one podcast where I tell you what I will trade, and I gave you the $1,000 challenge to follow. Currently, as I said, up at $4,153.94, and I believe it will come to much more than that in the pursuit for $10,000 and later hopefully also $100,000. But in order to follow this journey, you have to subscribe and hopefully also like the video. This video is different from any of the videos over the last 6 years in the sense that it's made on a Friday and not a Monday. Usually I post a podcast on Mondays, but my team wanted to try to post on a Friday to tell a bit more about the week ahead of us and give some of you an early start. That means I'm not into all the news for the week because usually a lot of things happen during weekend and sometimes big issues happen. But I will try my best to give you a somewhat accurate overview of what I think will happen in the week ahead of us and a little bit also about the future. And without any hassle, what I think really matters these days is how the Ukraine war will be solved, because it is getting to a point where it either will be peace or there will be no peace. And my take on it is as follows. As I said a long time ago, I thought if Trump would be elected, there would be peace, and I put my money and my mouth into it. I bet into the market, been very lucky as such. But we are coming to the point, as I said, where it can or are pushed to either way. This is not just talks now, it's really at the edge where they have to make a decision. And we do know that a lot of European leaders actually want more war. They want to try to push this further. No idea why, because it's a war nobody can win. And we know that US wants this settled. They want peace in Europe. If there will be no peace deal, of course this can just drag out slowly, but my bet is that things then will get much more tension, and this tension can and will push the stock market in a very bad direction. That is my guess, and it's why I am currently starting to feel that maybe I should reduce my exposure a little bit, because when market fell over the tariff talks, as you know, I went fully in with everything. Even sold my gold, which I had doubled. I sold it, and I just put money into the stock market, all of it, because I saw a one opportunity that comes very seldom. It's not a lifetime opportunity, but usually it comes every second year or so. These good opportunities. Buying Nvidia, for instance, for $88. Tesla was bought very cheap, and I filled up my account with NIO. As you know, I went heavily into NIO, and what a ride that has been and how it has paid off lately. But all profit can vanish very fastly. If you look at the chart says that Nasdaq is within a very nice rising trend and will most likely continue within it. Volume is dropping as the price is dropping. Nasdaq has been falling from 21,700 about points down now to 21,000. You heard me argue why this would happen as well if you go a few podcasts back. Now it hits a lot of support, and with the volume following the index, we love this. We want volume to go up when the market go up and go down when the market go down. Much easier to predict. And it has absolutely gone down in the fall, meaning that not too many believe there is a big fall ahead. So that's why volume is low, but enough to push the prices down. This has triggered a short-term sell from a short-term moving average, but long-term moving average is still a buy signal. RSI is 61. It's not very low. It's not an obvious buying point, but there is a lot of things in the chart saying that we might might just find a bottom during the week ahead of us, which will be week 35, by the way. So it's a huge chance that we will find and we will go for yet more upturn, because if you look in the longer picture, everything is indicating that Nasdaq would push to 25,000 points. But I will have to finish the argument about these two cases. What I think will happen if there will be no peace agreement, I think things will just escalate. I think Russia will use much harder. They have more weapon than they have shown off lately. I think they will push much harder, and I think Europe at some point is just going to decide to do something which probably will be very irrational and escalate things further, meaning that we put scare into the market and will have heavy disruption on everything. It might be the point where I will just boom back into oil stocks and boom back into gold just to secure my assets, because we can have a huge strong fall. Doesn't have to happen. We'll just see, but it's one of these long-term scenarios. If things go the positive way, which I think they will, that they'll more and more talk and everything will head more toward peace. We are on the path, which I believe the strongest in, that this decade will be a decade of growth. And looking at buy and sell signals, they often give an indication of where is the possible buy and the sell in. Shows that Nasdaq, for instance, only have 16% buy signals. It's a good thing, means there is a lot of companies at Nasdaq, especially Nasdaq, which have huge potential upside. I don't believe this to be necessarily Nvidia, Microsoft, and the big tech 7 like Google and all this. I think some of these stocks, which been hammered lately over many years, will come back roaring, and the end of the rally will be when the penny stocks go totally amok. But that there should be a nice upturn. If we look at the New York Stock Exchange, we see it's 36, is very balanced across all the stocks, is 40% buy signals. It's a little high, but it's driven by Asia, which is really up. Shenzhen, for instance, 73% buy signals. Tokyo, 55. If you're a new listener and you get a little confused, so what does this mean? It's just a measure between 0 and 100. And normally you want a balance of 1/3 of buy, hold, and sell, meaning that these are equally distributed. If buy signals get too low, it just means there is a buying opportunity. If they're getting too high, it just means that maybe markets are getting overbought. Hasn't been wrong so far. Anyone listening to this podcast for 6 years now know that these signals are absolutely trustworthy. Maybe you miss a week or two, but in the long run, they really know how to pick the good time in the market. And every time Nasdaq, New York Stock Exchange been down under 10, I've been buying like crazy. And every time they've been up at the 50s, I've been selling hard to get down my exposure in the market. Been correct, missed maybe a few weeks, as I said, here and there. But in the long run, it's been a very solid strategy. The buy and the sell signals you will find at StockInvest.us. Just go to the front page or into one of the exchanges, and you will see how many buy and sell signals are issued for the market that you desire. The chart says everything is good. The buy and the sell signals are not overbought. Nasdaq, even on the lower end, indicates that there's a high chance that things may go very well. I would pay very strong attention to what happens with these peace talks, because we see some European constellations which are not good in my opinion. These are, sorry to say, some of these people are nutcases, and they can bring a lot of damage. We have to just see where what they land on. But representing different countries, they have the ability to really make things turn fast, bad, very fast. And again, repetition, there is no way, if tension escalates very hard, that market can tolerate this. Market has been growing back up, they've been coming back up. PE ratios, price to earning ratios, are starting to get high for some companies, but not all companies. The expectations are that we are in a good growth period for economy, and the economy is fueled by energy. I told you over 1 million times that this is also where you should put your focus when people talk about inflation. Look at the oil price. Oil price been very steady. It's been falling steadily, but currently sitting at $63. I would love to see it much lower. The lower the oil price is, the higher the chances that the markets will go up, because low energy cost fuels everything within production. So far, remaining steady, and this is also one of these indicators that you should put on your watch list. Keep an eye on what the oil is doing. I went into oil when oil was 20 some dollars, even was sold negative for shopper. Anyone listening, and we are in the early periods of 2016, I believe it will be. Sorry, 2020, 2020. And we saw how the election went then. I just said, I buy war stocks, I buy oil, because this is where the future will be. And oil went, as you know, sky high, was far up above 100 and stayed for most of the period over $90, but now back at 63, and I think it still is downside. Saying that, I'm into a lot of dividend stocks. Advise you to do this as well. It's a nice way to offset your risks a little bit, to be in good dividend paying stocks. It's how I've been changing as a strategy, especially this year, going for building up a dividend portfolio. One of the stocks which I have in my dividend portfolio is Frontline. Frontline is supposed to have earnings on Friday, I believe. Yes, Friday is correct. It's a Norwegian company listed in US and listed in Oslo Stock Exchange, been paying very nice dividend. But their earnings are expected to fall from 0.62 to 0.42. They distribute oil, but I believe rates will keep high, and most of my dividend exposure is into logistics and transport, not so much in oil companies, but those who do transport of gas, oil, and containers. Container ships been smart, good investment. Very, very happy about that. I believe the rates will remain high, because, as I said, I believe there will be a huge growth in world economy. We'll see much more traffic. Everyone is blended by these tariff talks, but I think people lose the scope of the bigger thing. Another thing that will indicate where we are heading in the world economy will be the money supply, which will be numbers on Tuesday, expected to be around $22 trillion, the money supply for US. This is a very important number, because it means how much money is circulating, and the less money, the less probably will flow into stock market. So we like high influx of money. There will be quarter results coming out. None of these are big enough to change the market much, but they will signal some. The biggest will of course be Nvidia on Wednesday. All eyes are on Nvidia. I'm self-invested in Nvidia, doubled my shares there, share value there. Bought Nvidia 88 or 82, I have to check. It was one of these places, currently sitting around 173 or 174, was up at some 180, and will most likely push much upward, because the AI race is not over yet. There will be influx in the AI world before it will find the top, and during this period Nvidia will keep selling hard. But the expectations are that the revenues will grow, the earnings per share will grow to 94 cents per share, up from 65% share. That's a 44% increase. But what is the expected swing? How much is this expected to affect Nvidia on the earnings day? Well, the expectations is around 3.8% swing, so not too much. A stock that is expected to swing much more is, for instance, MongoDB, which will be on Tuesday, expected to actually lower the results. And that might be one stock I think you could look into, and I will give you a reasoning why. And the reason why I think that you should look into MongoDB is because of AI, of Claude code especially, because everyone is coding now. It's called vibe coding, where the normal human without any programming skill is installing Claude into the terminal and prompt it, create me an app, and it does it. But no matter what app you make, at some point you will need a database, and with the explosion in users now working on so-called online tools, creating web pages, creating applications, I believe money will flow into DB because you need a solid backend. Yes, you can do flat files, you can do all sorts of things, but companies like MongoDB might be just the thing that you should look out for in the next 2, 3, maybe even 4 years ahead. Anyway, it's expected to move 5.6% and it's expected to reduce its losses from 84 cents per share to 64 cents, running in losses, but expected to reduce the losses Tuesday. That will be MongoDB. Okta will also be on Tuesday and expected to swing 4.8%, increasing their revenue as well. Wednesday, I mentioned Nvidia, but you also have CrowdStrike, Snowflake, Agilent, and NetApp. And CrowdStrike is expected to lose more money. They are actually expected to have their earnings cut from 24 cents profit per share down to a loss of 19 cents per share. It will be interesting to see how that turns out on Wednesday. Thursday will be followed by Dell, TD, and Ulta Beauty, and I know Ulta Beauty being a favorite for many people. More interesting in my opinion will be Friday with Alibaba and Frontline. I already mentioned Alibaba expected to swing 5.53%, and we see some of the Asian stocks now doing a nice rebound, and one of them is Tencent Music. And if we go some 2-3 years back, when Tencent was really hammered, I told you I believe it's a super opportunity. Now later it's up by 4 or 5%, 4 or 5 times up the price. I don't remember exactly where it was back then, $2 or $3. Now it's 15, 16. You have to check for yourself, but it's been going extremely nice. Do I have it? I don't have it in my private portfolio, but I have it in the company portfolio. What else is there? We are 17 minutes into the podcast. I promised myself before starting I would not make it a long podcast. But if you're still listening and you still like it, remember, press that like button. It's the only way to grow and help this podcast survive, and subscribe as well if you haven't. What other economic indicators will be next week? Well, there be new home sales on Monday. These are expected to grow a little bit. There will be 3 and 6 month bill auction. This is a little bit important because it's the access to money for US. So they have deeper implications on the market, a little bit more tricky to understand. But for a few periods, especially end of last year, it was hard to sell the bills because less and less trust in US economy. But the trust is growing up again. This is seen in a lot of numbers coming out. Some of them some have already come out and some are coming in. And one of the things that you easily can follow is the euro versus the US dollars. And right now, dollar's been on a nice flow, strengthen itself. It was 1.19 against the euro, and just before the podcast I saw it was down at 1.15 something. And I believe, as I said, I think that was last podcast, I said I would probably do this. If I were you, I would probably look into maybe doing a little bet where the dollar will strengthen. Lucky, because that turned out to be correct. How far down will it go? I don't know, but I can easily see the dollar go to less than 1.10 against the euro. But a lot of things are coming up, so this is a gamble. It's something that you should keep on the watch list. But if you are heavily exposed in the market, meaning that you have a little something amounting more than just a few $1,000s, let's put it like this, you have enough capital in the market. Remember that when there is fluctuation in currency, it impacts the cost revenue side of any company. You should know a little bit about this. Understand, let's say that you have a huge stake into some major company. You should check how much exposure there is towards the currency that you expect to change in. Because if dollar strengthens, now what will happen with sales, etc. Thursday will be the jobless numbers. They are expected to increase a little bit. There will be GDP growth number over Q2 expected to be around 3%. Corporate profits is expected to actually grow. Last quarter it was minus 3.3% growth for the corporate profits, but they're expected to be up at 1.8% growth for Q2. And I checked a lot of other numbers and they were all positive, by the way. Core price index numbers is expected for the month to be 0.3 and year over year 2.8%. I'm not sure if I told you everything there is to say. The 10-year treasury yield is at 4.33. I think it will lower, and whenever it lowers, the markets usually go up. We have to come to some sort of conclusion, and of course, the $1,000 challenge. What will I do? Will I sit in NIO? Or will I sell it, or have I sold it? I told you the portfolio has a value of $4,153.94. Started with 1,000. You have to just stay tuned for a few more minutes. Before telling you, just let me wrap up everything for the week ahead of us. Everything is indicating. I think it's too short for things to escalate or de-escalate between Ukraine and I want to say US, because this is maybe a proxy war and not so much anything else, but between Ukraine and Russia. I don't think the week ahead is too short to have some real impact, but it's a longer term game. Looking with this expectation that it will be more about what we see in the trend, what about the numbers coming up, etc. I believe it's a fair chance that we'll have a green week. Actually, I'm very certain that we will have a nice green week, but we are at the point where volatility will increase, meaning we will higher up and down during day, and in this period it can go really bad. But every time the volume is this low, it's usually a good buying opportunity, but I can be wrong. And just that being said, personally, as you heard, if you just remember what I said some minutes back, when all this tariff turmoil was, and everyone was selling and everyone was panicking and shouting all over the place, I bought with everything I had. Meaning that I got to a huge exposure into the stock market, the same that I took when the COVID went in. And you heard me reduce it and use the chance when the Nasdaq hit 16,000 to buy more, etc. And now again, I will start to reduce my exposure in the market simply because I'm too much weighted in stocks as is. And nothing is given, that's for sure. It's a way to play the game. Now, the $1,000 challenge, and in last podcast I said the following: I believe that when I will return next time, we will see NIO above 5 and portfolio above 4,000. And we did, because it's Friday. And NIO is currently pre-trading around 590 after many good days last week. The reason for this is that NIO is expanding, but all Chinese, especially Xpeng, etc., is growing quite nicely. So there is huge expectations. NIO also said that they will be profitable by Q3, which is coming up very soon. Q4, which will come up. And my bet in one of the StockInvest.us podcast videos, for the 10 companies to do good in Q3, NIO was one of them, and I argued in the video why. But currently sitting, it was bought into the portfolio at $5.10, and then we had to follow all down, and I just said that it's just a matter of time. I believe so strongly in the upside. It was just a little bit bad timing, and we had to go quite far down. Actually, the portfolio was down at 2,300 or 2,500. Started at 1,000. We were growing different stocks. and now it is back into new record, $4,153.94. Repeated for the fifth time because it's a very nice sign amount, and I'm heading for the $10,000, which I said I will try to grow. This over all these years, I've given you different portfolios, but last year I started a new one because I wanted to do how I started my trading, go into stocks, argue a little bit why they should be oversold, there should be very strong reasons going into high risk stocks. I started my trading career with less than $400, but this time I started with 1,000 because it was such a round number, a number that hopefully many of you were able to follow. Now that portfolio sits at over $4,000, and I still sit in NIO and will sit in NIO. I think the following, because there will be some quarter results very, very soon. September 2nd or whatever like this, there will be some quarter results for NIO coming up, and I will tell you when it will be. Anyway, the quarter results, what I think is the push in the stock now will push it high. Impossible to say if it will stop at $6, if it will stop at $8, $9, impossible to say, but that there will be a back turn. I think the fair price of NIO is much more closer to 8 than it is to 5. But if the stock goes into a frantic rally, meaning that it gets way too overbought, and sometimes this happens, it's been pushing, and suddenly everyone wants it, and then it pushes crazy up, and we get during a day 20-30%, and we get up to 7, 8, 9. I might sell for a short profit taking, buying in. I promised myself when doing this podcast that I would always tell you upfront what I would do, when I would do, and I've done so far everything. With the podcast being on Monday, I always told you which stock I would buy before the market opened, and has been the case ever since. This will be tricky because I will not be able to tell you exactly when and if I sell, but if I do it, it might just be a flip trade, meaning that I will just take the advantage, because I have this feeling that it might go into a frantic rally, and it might be stupid not to sell if it goes too high, just to take a swing trade. Let's say that it pushes straight up to 8, and then in my opinion it should fall easily back to 650 or whatever it will be, and that will be insane amount of stocks that we can accumulate. It's not good for the $1,000 challenge because it's hard for you to follow. I should just go in and out of stock. I will really think about it if I will do it like this, or if I just will stay steady and just tell you when I will sell. And don't buy again before I tell you first. It's a tricky thing, but maybe you understood what I was trying to say. 28 minutes became a long podcast after all. It is Friday. I will wrap up the podcast, put it into production, put it out so you can watch it, and I hope you will have just a beautiful weekend. I hope that the week ahead of us will treat you well, that your bank account will be much greener by the end of the week. If not bank account, at least the trading account will be much greener by the end of next week. Until then, just have a super week. Bye.
Welcome to StockInvest.us stock analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information, you agree and are held liable for your own investment decisions.